get back to your other question related to the married put position. This was a discussion we had last week. I'm in a slightly different position, but Bill was in Fortinet. He got into Fortinet at $69.49. My price was $62.60. That's after some income methods and adjustments. And Bill bought the January 75 put, still 161 days out, at $9.30. Mine September was priced at about $7.30. It's now worth $10.35. So I got a profit of 41%. He's got a profit of 68% on his put option, hedging against this large decline with the stock at 59. Stock's been as low as about 56, 50, 55.80, 55.50, something along those lines. Why? This is the stock I made the reference to of dropping 25% in earnings. This is when I was in as a married put with only about a 2% risk. Bill is in this position with a 4.8% risk. Okay. Now, one of the ways that how could I fix a stock that's down so much? We sort of saw this when I talked about, remember, if you leave the long call open in the stock repair and it remains in the money, even if your short call expires, your broker is going to assume you wanted to exercise the long call to buy another 100 shares of stock at that price. It's averaging down. Well, in the married put position, instead of putting more money into the position, I can average down my static break even and average down my cost basis by doing what? Using that second option, which is not just a wasting asset, it's something that has value. So I can adjust the put down in price, right? I could sell to close my put for $15.40 and buy a lower strike put for half the cost. Okay, I'm going to move it 10 points and only pay about $7 or so to make this adjustment. Now, this would increase the risk on the position. Why? Because I did generate about $7, okay, $6.85 on my cost basis. That now dropped to $7,100 from where it was before. But I'm only guaranteed an exit now of 65 instead of 75. That lowered by 10. So that's why the maximum risk goes up from where it was. This is income method number 9 in the blueprint, but there's specifics to do it. You don't do it each time the stock falls another strike level. You don't do it if you think the stock is going to continue to decline. You don't want to increase the risk and keep doing this and keep doing this and keep doing this. Have I done it yet in my account? No. Has Bill done it? I don't know. But just like anything else, what I'm looking for here's that giant gap we had in Fortinet from 76 down to, okay, it didn't drop to 55, I apologize, 56.50 was kind of the low. And then it started to come back up. What Ernie looks for personally, what I look for personally, it doesn't always happen. And rather than move this up to a 10 or 15% maximum risk from the 2% I'm at, I'm waiting to see if I start to see this bottoming out of the MACD and other indicators. If it starts to smooth out and sort of levels off here, and I start seeing this change in the MACD, it doesn't even necessarily have to cross over. And it doesn't have to necessarily be MACD. It can be anything you want. But once that lower line starts to level out and this line starts getting closer and closer, maybe right around this point, but more than likely when I start seeing this bottom out, that's when I'm likely going to maybe do that. It's not based on the value I have on that put. A 68% return from where I bought it, a 70% return from where I bought it, a 75% return from where I bought it. Which strike do I move to? Oh, well, that's discussed in the blueprint of what you'd look for there. I'm not going to give all that away for free, absolutely. It doesn't have to be MACD. You can use whatever you use to analyze that. Whether you use stochastics, whether you use Fibonacci, what you're looking for is, now that this event has happened, is there a point where it looks like it's going to stabilize and show me things that would look back to a bullish position that show me this looks like an inflection where I might consider the buy point for the stock? That's when I'm taking the profit off that long put and moving down to the other one. That's what we're looking for, is the bottoming out. Am I seeing sort of a rough bottoming out right now? I wouldn't say so. I was thinking about it. I mean, this was a good little, hi, I'm recovering a little bit after my 25% drop. Yeah, I don't trust that. I don't trust that yet. I can't trust that yet. I need to see that more level and moving up and this moving down. I don't necessarily have to wait for the cross. I'd like to, but think about it this way. Here's how I explain it sometimes, Andrea. Look at your stock completely new. That's how I'm approaching Fortinet. I'm approaching the stock in my watch list. I have a put that guarantees me I can't lose more than 2.4% on this position. It's only to September, so I'm feeling much more pressure than Bill is. Bill's got the put out to January. I think his risk was only, what do we see, 4.8%? He's got time. Time is on his side. Okay? Time is working a little bit against me personally. I expected this earnings not to be 25% on the upside, but I honestly was expecting a good 7 to 12% jump perhaps with the earnings and looking for a really strong position. I was wrong. But I had to put in place. Can't lose more than 2%. And I still have ways to manage it right now. But I'm not managing it with that put yet until I'm confident that I've seen it. And again, where was I babbling about there, Andrea? Looking at it as a new stock. I'm ignoring this completely. I'm considering Fortinet as a stock that's in my watch list right now. I'm ignoring the fact that my cost basis on this is 62.06, and I have a 70 strike put for September. So I mean, my total cost base is higher than 70. Don't get me wrong. That's the 730. So it was up to, with cost basis, it's up to about 69. No, it's not bulletproof. I'm sorry. It's about 71.10 or something. And I'm guaranteed 70 backs. The max loss is about 2.4%, if I'm not mistaken. I know exactly where I stand there for the next 40 days, 38 days, whatever it is. But I'm looking at this as a new stock in my watch list. When would my trigger be hit to look for a buy? When I see that trigger hit that I might use to look for a buy stock with whatever indicators I use, that's what I'm going to roll down my put. That's when I'm going to put down, average down my cost basis. And as the stock starts to move up as I hope, which usually tends to happen if I get the right signals, most of the time, I'm going to start using those other income methods, start paying for the position, start trying to get back into the profitable zone for the FTNT position. All right. That's how we explain it. That's what Ernie looks for. What he does, the 9-2, you wait for the stock to have bottomed to where you think the stock's bottomed. Are you always right? Absolutely not. Can the stock go further down? Absolutely. Does the risk increase when you do this income method? Absolutely. The full SIGA model of when and why you do this is in the blueprint. But do you wait for that price just as you would potentially to get into a new stock or a new position? And that's your trigger to when to roll. That's how Ernie approaches it. That's how I approach it. I do not. Now, this one you couldn't follow down, down, down. This was all one sudden movement. But, many, even blueprint owners ask me, hey, I bought Fortinet at $68, $69 per share. I have the 75 strike put, and I've got a risk of 6% on the position. So we're at 65 cost base of the stock, whatever we put in that 75 put strike. And now the stock's dropped down to 60. Should I move from the 75 to 70? Well, now it drops down to 56. Should I move from the 70 down to the 65? Then it moves down to 53. Well, should I move down to the 55? And so on and so forth. You don't want to keep following it down in that fashion, because here you're going from, let's say, a 6% risk to a 9% risk. Then from a 9% risk to an 11 or probably 13% risk. Then from a 13% risk to a 17% risk. Right now, if I did this adjustment, you saw it, or if Bill did his adjustment, he moved from 4.8 to 8.4. Lack of a better term, don't chase the dragon. Don't catch the falling knife. That's discussed in the blueprint. I won't go more into that income method number 9 chapter. When and how to use each individual income method, when and how you would use income method number 9, and how not to use income method number 9 in those situations as well.